NIIT Technologies. Let's bring on board Arvind Thakur, the VC and MD at NIIT Technologies. Arvind, hi, good afternoon. Strong revenue growth of about 7.6% in constant currency terms. And I understand that it's broad-based across verticals. Is most of the growth fueled by top clients in US and Europe?
No, as a matter of fact, it's pretty broad-based. We've had growth in our top clients, as well as we've increased the number of million-dollar clients as well, and this has happened across all the major industry segments that we focus on, whether it's BFS, insurance, or travel and transport. So, as you mentioned, broad-based growth for the company, and another great quarter for us.
Okay. Could you quantify for us that how much of your margin picture has got a rupee link here? What I'm trying to understand from you is that if I look at the numbers which have come out from TCS or NIIT Tech or Infosys, none of the companies have come out in the open and said that because of rupee our margins would move to a different orbit. The margin predictability, despite a strong currency tailwind, has not changed by any of the IT companies. Why is that?
I think it all depends upon the kind of hedging which companies may have done against the dollar and other currencies. So in our case, as you would have seen, growth in terms of reported numbers has been 10% quarter on quarter. In constant currency, it's 7.6%. So we've had a margin, or I would say a currency gain of about 2.47 in our revenues. If you look at our margins, it's predominantly been an expansion on the back of the business itself. Our margins for this quarter have been 18%. If I look at it in terms of constant currency, it would have been 17.8%. So about 20 basis points has been the currency impact as far as margins are concerned.
Right, but in the following quarters with this new reality on the currency, do you see any sort of benefit translating into margin expansion, especially when you go in for new negotiations on deals?
Well, like I mentioned, it all depends upon the hedging policy. What we have seen is, and you'd probably notice that we've had currency gains, hedging gains for the last 4 or 5 years because of the policy. This year there have actually been hedge losses that we have booked, but despite that we have seen margins expanding. So I think we have a sound hedging policy in place. The good news is that the expansion in margins are really on account of improvements and efficiencies in the business, and that's what we are really focused on.
Right. Also wanted to understand what exactly is happening with your deal books, and if you could give us a sense of the portion of larger clients and whether or not they're coming in from the digital segment of the business.
Indeed. In fact, a lot of our new clients and the new businesses that we've been doing have been in the digital segment. Our digital business has expanded 11.6% sequentially and 38% over the same period last year, and now contributes to 28% of our revenues. In fact, even if you look at our headcount additions, in the last 2 quarters we would have added close to 1,000 people. 50% of the resources that we have inducted have been to service our digital clients. So the real growth in the business is coming from our digital business.
Total sales, where do you think the digital business is headed, and is your digital business a higher margin business than from your traditional businesses?
Exactly. In fact, one of the reasons why we are seeing a margin expansion in our business is that the revenues from digital are a greater proportion of the revenues, which come at a higher margin, and that's improving the margin profile of the company as well.
So for rest of the year, are you optimistic? Are you cautiously optimistic, or you are outright bullish?
No, in fact, if you look at our track record now, we've shown consistent revenue growth, and this revenue growth is happening with margin expansion. So it's not revenue growing at the cost of margins. We've demonstrated deal momentum, which also has been consistent for many quarters. This quarter we have had an order intake of $160 million US, which is up. Last quarter we had $151 million US, which was higher than the previous quarter. So I think we have good momentum in the business. The macros are also favorable. So we expect to we continue this good performance going forward as well.
Okay, Arvind, great speaking with you, and good luck for the future quarters ahead, and congratulations on the one gone by.
Thank you.